prior to the split. Tesla was trading at $22.30, and by August 31, the extremely high share price had dropped to a more reasonable level. By August 20, Tesla announced a 5-1 stock split, which became effective on August 31. Tesla had increased sales by 6 times over the preceding 5 years when it announced the split, boosting total revenue from $4 billion to $24 billion at the end of 2019. The company's gross profit increased from $924 million to $4 billion at the same time. 446 shareholders who previously only held 1 share now held 5 shares, while the production of the Model 3 and Model I increased by 3 percentage points. The production of Tesla's more expensive models decreased from 17 of all vehicles built in 2019 to 15 in the first quarter of 2020. In this video, we'll examine the available data on the stock split and whether it will occur in 2022. What day did the separation occur exactly? Watch to learn how stock splitting was used to demonstrate how items could be made more easily available. It not only makes it possible for investors with little capital to engage, but it also excites consumers searching for reasonably priced luxury goods. Tesla attracted investors by lowering the bar for entry while upholding the same high standards, which gave those who were on the fence more justification to buy than before. This had a domino effect and was a fantastic boost for the Chinese economy, similar to how the Model 3 was favorably welcomed and swiftly rose to the top of the electric car sales charts. The Model E's introduction in the US caused demand for it to soar beyond that of the Model 3. Ultimately, the concept that Tesla products are inexpensive and that demand has surged as a result of the stock split has benefited the company and the stock price. When Tesla's stock reached around 1,300 last summer, Elon Musk believed that it was too expensive and that more people should be able to purchase Tesla shares. Soon after the disclosure, there was a 5-for-1 stock split. Thanks to a spectacular rise this year, Tesla stock is finally back to where it was 15 months ago. However, this has stoked rumors that Musk may launch a new stock division to target regular investors. The rumors have split analysts and investors, with some claiming that Tesla's values are absurd, while others hope for a similar split in the near future. It is true that Tesla is more valuable than all other automakers put together, but at current levels, its price to profits ratio is 50 times greater than that of any rival, meaning it would take the company another 20 to 30 years to catch up. According to estimates, Tesla needs to sell 31 million vehicles by 2031 in order to cover its present cost. However, the opposing view states that traditional valuation metrics cannot be used to compare a company like Tesla to original automakers like Ford and Toyota. Measurements and pricing projections for Tesla should take into account intangible assets like goodwill and branding patents. According to the argument, Tesla is a technology company that masquerades as an automaker. The value of Tesla's data is enormous because it may be used for artificial intelligence software services and other services, such as those mentioned during the Q4 results call. Tesla invites inquiries from potential investors. Tesla will address the most frequently asked investor questions. Almost 1.4 million shares or 10,000 stockholders have already submitted and voted on the questions. The most common queries relate to capital expenditures, free cash flows, the level of customer service provided by Tesla as the business expands, the introduction of the Cybertruck, the amount of cells sold at the moment, and the stock split, since many individual investors think it is impossible to purchase Tesla shares for more than $1,000. This quarter, Tesla is concentrating on expanding its manufacturing capacity. The company anticipates expanding by 40% and having produced 350 cars, most of which were delivered. The estimated EPS for Tesla is 235, almost twice as high as the EPS for the prior year. Revenue is anticipated to reach $16.65 billion, up 55 from the year before. Tesla's 5-for-1 stock split was obviously advantageous to the company and its shareholders. It's also evident that the company's market share has increased to comparable levels, but this is only because of its higher sales profitability and recognition for its innovative products. The conditions and price action that follow a stock split are determined by the company's fundamentals, even though it doesn't always provoke this kind of reaction. For Tesla, it was a win-win situation because the company's stock and products are well liked by both stores and regular people, even if the idea that shares are more affordable is based on perception rather than reality. Some experts are in favor of a split because they see it as a marketing gimmick and because increasing the number of shares could help with improved CEO compensation for starters. It's important to understand what a stock split is. Analysts predict that Tesla will see a parabolic increase and that any year-term split will be beneficial for the stock as long as the company maintains its true character. Retailers trust in the brand. The most crucial thing to keep in mind is that a stock split, put simply, is the division of a single share into several shares with the same total value as the original share. It does not increase investor wealth, nor does it provide additional funds to the firm whose shares are being split. Comparable involves splitting up already prepared food into 4 or 5 pieces, but the overall dish stays the same both before and after a stock split. Ownership by shareholders remains constant for a number of reasons, including increased accessibility to individual investors from split their stock. This increases the liquidity of the company's shares and makes them available to a larger pool of investors, which is anticipated to raise the stock price, but this isn't always the case. As of right now, Elon Musk has more than 64 million Twitter followers. Furthermore, there is a sizable internet fan base for each of Musk's firms that excitedly anticipates any new advancements. The 12-9 hypothesis is a novel idea that has been making the rounds on Tesla's Twitter account. That is predicated on investors and fans of the electric vehicle manufacturer, stating that the company is thinking of splitting its shares on December 9. The recent stock split of Tesla served as the impetus for the theory. Elon Musk tweeted on May 1st, 5 weeks stating that the price of Tesla stock was too high. Later that year, the e-maker announced a 5-1 stock split, which caused a significant increase in the stock's price owing to inflation. $420 has increased by 69. Adam Hoof, in a tweet, stated that performed some mathematical magic. He added 420 to 69 to get 489, then added the first 2 digits once more, 4 plus 8 to get 12, and left the 9 alone. After that, he posted 12.9. It is likely that Adam's suggestion was a joke, but Tesla Twitter jumped on it, searching for 12.9 in all of Tesla's operations. Some Twitter users believe this was not just a coincidence and that Musk sent a cryptic message to his followers announcing the split of the stock. This serves as the foundation for the 12-9 hypothesis, which attempts to predict Tesla's upcoming stock split. The foundation of the theory can be found in a joke made by Elon Musk involving his 2 favorite numbers, 69 and 420. Some of the supporting information was so specific that just came out of nowhere. Realistic. Musk added, but however, could happen that I'm not aware of. Elon Musk disproves the theory during effectively put an end to the 12-9 theory. But as Musk likes to say, asked what would happen to irony on December 9th. So if anything does, the moderator said nothing as far as I know. On December 9th, we will definitely be watching. After the company revealed plans to sell cars to Uber and Hertz, Awana analyst Ed Moya believes that Tesla's prospects are improving. He notes that other global rental companies will probably hurry up such orders. He observes, I was mistaken when I said that $1,000 wouldn't happen. And that although some contend that the stock's valuation is irrational, Tesla's climb has been rapid because the company was able to adapt and handle the chip shortage better than its competitors. Since retail investors give the company a call-like following, a new split will benefit the company, which Maya believes will hit $2,000 in the near future. If investors embrace the split, the stock will soar. What do you think about the split? Please leave a comment below.